Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm excited to join you on this Wednesday, June 23rd. The timing of this session couldn't be much better as the NASDAQ and the XLK, the technology ETF, both just broke out to all-time high closes on Tuesday. And we're now less than a month away, maybe 3 to 4 weeks away from the start of earnings season. So I thought maybe the theme today would be looking for some stocks that might be kind of fit into that strategy. Looking for some pre-earnings run-ups. Before I get into any of that, I do want to just take you over to earningsbeats.com quickly. Just let you know we do have a free Earnings Beats Digest newsletter. You can simply go to earningsbeats.com, type in your name and email address in the boxes provided, hit that subscribe button. There's no charge, no credit card required. You can unsubscribe at any time. There are newsletter articles published 3 times a week, Mondays, Wednesdays, and Fridays. I think you'll enjoy it. Very educational in nature. I think will help with your trading. Moving on, one of the things I wanted to point out before I get into the charts is an article that I had written in Chart Watchers a little over a month ago. And it had to do with how the S&P 500 performs during certain periods of the year. And I was really focused here in this article on the pre-earnings season and the run-ups that we get in the stock market. And so I'd done an analysis and gone back. This is the S&P 500 since 1950. So we're going back quite a ways, 7 decades. And I had broken down, I showed the periods that I was looking at, coming up with annualized returns. And so the period heading into the start of the January earnings season, you can see the annualized return. Same goes for April, July, and then October. And you can see the annualized returns are all very strong. And if I take all of the data for those 4 quarterly periods and add them together, you'll see that the pre-earnings run-ups, these periods heading into the start of earnings season, have yielded annualized returns of over 24% over the last 70 years. And if we look at all the other days of the year outside of the pre-earnings run-up, the annualized return drops to 4%. And then the total number of days and your total annualized return throughout the year is 9%. So I just think it's really interesting and something you need to keep in mind, whether you're a trader or an investor, but particularly if you're a trader, that the lion's share of gains are made in the stock market as we approach earnings season. I know that probably makes more sense to wait for earnings to come out, but that's not the way the stock market works. The stock market is always pricing in these moves ahead of time. Now, in addition to these numbers, I've also broken down the technology and consumer discretionary areas, so the XLK and the XLY. And I've looked at the historical significance of pre-earnings advances on both of these 2 sector ETFs over the past 20 years, because the data doesn't go back beyond that. But the XLK, if I look at the 28th of the month to the 18th of the next month, this would be December 28th to January 18th, March 28th to April 18th, June 28th to July 18th, and then September 28th to October 18th. If I look at all of that data, now that's not on this in this article, I'm just reading these numbers out to you. The XLK's annualized return from the 28th before earnings season to the 18th as the earnings season is getting underway, 28.11%. And consumer discretionary, the XLY, 30.73%. So these are the 2 areas of the market that really tend to drive this annualized growth that you see in the market as you head toward earnings season. I just wanted to point all this out because it is now June 23rd. We're getting very close. Earnings season will start in roughly 3 to 4 weeks. And so what I wanted to do was to take a look and go through 5 charts today that I think could present some really nice opportunities for us as we head toward earnings season. These are companies that have a pretty good history of solid advances as they prepare for earnings season. You've probably heard the old Wall Street adage, buy on rumor, sell on news. And I really think that it applies more to earnings season than maybe just about anything. So with that, lead up, let me walk you through 5 charts that I'm interested in owning, 5 companies that I'm interested in owning as we start to move toward earnings season. And these names, by the way, are going to be mostly household names. These are going to be companies that you've heard of before. They have a very strong tendency of producing excellent results and also tend to move up historically into their earnings. So the first one I want to go over is Apple. So Apple currently, I'll go ahead and give you the latest price. Currently is trading 133.72. You can already see here in June that it's begun to make a move to the upside. And when you look back, I mean, it's not going to be many of these pre-earnings runs are not straight up. But if you look back into the end of March right here on Apple and into the early part of April, you're going to see a pretty nice move. Once the earnings came out, Apple's done hardly anything. If you go back to December, we made a run up, we pulled back, and then we made another run toward earnings. And then, of course, once earnings were over, then we kind of pulled back. You go into October, September, end of September into early October, you see that move up. And later in the month, earnings come out and the stock goes down. And then late June into early July, once again, you can see this pre-earnings run to the upside. So it's hard to say exactly how Apple will perform from here, but I would be a fan of buying the stock on any pullback to the rising 20-day moving average, knowing what we know about Apple in these pre-earnings advances. The second stock I want to bring up is Tesla. Tesla will be reporting on July 21st. I also had written another separate article over at StockCharts a while back, and Tesla was featured along with maybe 1 or 2 other stocks, companies that have tremendous track records on big advances heading toward earnings reports. And Tesla is one of those. And you can see Tesla having a strong day so far today, trying to get back up through its 50-day. This could be the start of a more significant advance in Tesla. When you look back, March into April, a little bit tamer than what we've seen in prior quarters. But if you look back to December into January, huge move up. You look at the end of September into October, a decent move up. You look at the end of June into July, another huge move up. I mean, we're talking from under $200 a share to over $350 a share. And while I wouldn't be looking for that type of gain on a percentage basis, it is interesting to note that Tesla, Apple, and these others I'm talking about do have a tendency to make these runs heading toward their earnings dates. Third company I'm going to mention, Amazon. Been waiting for months for Amazon to break out. They'll be reporting along with Apple on July 29th. Many tops up here at around 3,500 to 3,550. So that's going to be your first significant clue that we've got more gains to go. Amazon's already made a nice move to the upside. Pull back to the 20-day, I think would be a great opportunity to jump in. Ultimately, I do see this one breaking out and making another run toward earnings. You can see late March through early April, big run there. December into January, not so much. September into October, big run. June into July, big run. So there is a tendency here, and it seems like maybe we have another one on the way right now. MGM, this one, another discretionary stock. Just looking back at it, I mean, late March into early April, made a little move there. Not so much in December into January, or actually the last couple. So this one maybe not as much. I would say MGM, I'm more excited about the overall pattern, just the sideways consolidation. And with the reopening, I feel like their report is probably going to be strong. I would watch if MGM breaks out above this 44 level. Perhaps we'll see a nice a move higher into their earnings also on July 29th. And then finally, Netflix. Netflix hasn't been doing much, but this is a company that you really want to be paying attention as we head toward earnings. Late March to early April, really nice move there. Here we had actually pulled back into January, but then gapped up with the earnings. Look at late September to early October, big move. And then the same thing throughout the early part into the middle part of July. So these are 5 companies that I'm watching as we head toward their earnings dates, which will be coming up anywhere from about 4 to 5 weeks from now. But these are companies that have a history of moving higher into earnings. The overall market has a history moving higher into earnings. So these are stocks that I certainly would be looking out for, and hoping to ride some of these gains into their earnings reports. All right. It was a pleasure joining you today on your Daily Five. Please remember to go over to earningsbeats.com, sign up for our free EB Digest newsletter. Would love to have you. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.